Thanks for tuning into the All Funds Network. My name is Mike Schroeder. Today we're here with my co-host, Tyler Steinke, and we are joined by Steve Vlasak of Richey May. Steve, great to have you on the podcast.
Yeah, really appreciate it, guys. Hopefully you had a great new year. Appreciate the opportunity to talk a little auditing on digital assets and so on. If you'd like, I could just talk about my firm real quick so people know.
This episode is brought to you by our friends at Richey May. Richey May provides audit and tax services for alternative investment funds. You could find the link to their website and contact information below in the description. Now back to the episode. Let me tee you up. So the point of this series, these are short episodes. These are meant for somebody that's looking to start a fund right now. We cover a lot of different topics. In this particular episode, we're going to be talking to Steve about audit for funds. So, yes, Steve, why don't you give us a really quick intro to Richey May, and then let's hear what does an auditor do for a fund.
Sounds great. At a high level, Richey May is a national CPA firm, have a few areas of focus. My group specializes in alternative investments, so hedge funds, private equity, venture capital, and lots of digital asset funds, which is why I'm on this call now. My background initially was auditing, so I did that for about 15 years, and now my role is business development. As far as, what does an auditor do? At a high level, the auditor's job is to really verify all the numbers that come on the draft financial statements at the end of the year, making sure it's in accordance with GAAP, which is the most common accounting standard. And on occasion for international funds, we'll see IFRS. There's really 5 key areas of focus when it comes to an audit: completeness, obligation, valuation, existence, and reporting. Our job is to really trace all the expenses throughout the year, contributions, withdrawals. We're going to send out independent confirmations to all the third parties to verify balances with banks, brokers, centralized exchanges, as well as legal counsel for pending litigation. And then valuation's a big part of it. For liquid strategies, we're going to work with third-party groups, like Bloomberg and IDC and CoinMarketCap to really calculate the valuation, making sure it's accurate. And then for VC type funds, we'll be involved in drafting up the valuation policies, procedures, making sure it's getting them to fair value and it's in accordance with GAAP. And then, the last 2 things when it comes to an audit, really looking at the internal controls, making sure there's no deficiencies. And if we see anything, we'll help our clients fix that before the end of the year. And just making sure the financial statements include all the necessary statements and disclosures, things like statement of partners capital, balance sheet, financial highlights, schedule of investments, and so on. That's really at a high level what our role is. There's a lot behind it, a lot of back and forth throughout the year, but that's the big part of it.
Yeah, definitely a lot of different components there that are important. Just curious, Steve, as fund managers are looking to launch funds, when does an auditor come into the picture? Is that early on when they're drafting the formation docs? When do you guys get involved, or when do you like to get involved?
That's a great question. I find that it makes the most sense right when those draft docs, the LPA and PPM, are available. We like to review those closely from an audit, from a GAAP perspective, provide comments and sign off. And then also, specific to digital asset clients, it's important to be involved before the launch of the fund so that we can get API connections for the centralized exchanges and really capture that data starting on day one or really close to it. Because as you guys know, some exchanges don't let you go back too far in time. So it can be really difficult to issue a clean opinion if we're getting onboarded a year after trading started.
Got it. And same for like traditional funds, you guys want to get involved early as possible during that formation process?
Absolutely. I mean, it's pretty consistent across the board. Doing those fund docs, there's nothing worse than, getting onboarded a year after the fact and we see deficiencies in the docs, material things that need to be updated, and then they have to go amend their documents. And then the other reason is there's a lot of due diligence that goes into, when a fund's launching. A lot of times banks will want a letter from us verifying we're the auditor. The prime brokers will do the same, and even potential investors will contact us to make sure we're engaged to do that work. So it's all upside, for the new funds to onboard us at that point in time.
Mm-hmm.
Yeah.
Is an audit required?
So it is in a lot of cases. You'll have the regulatory side where if you're SEC registered, it'll be required. If you're NFA registered, it's required. Certain states have requirements, others don't. Cayman, BVI, they'll have regulatory requirements. So in those cases, you'll have to have an audit. But in addition to the regulatory side, um, for marketing purposes, I mean, what I see out there, if outside of family and friends, if you're not getting an annual audit done, capital raising will be very challenging. It's kind of a deal breaker for a lot of
Yeah.
investors, especially institutional. They view it as an insurance policy, and it's really a deal breaker if you're not getting an audit done. So those are really the two main reasons to get an audit done.
Yeah,
Yeah.
that makes sense. And then just maybe kind of detailing, and I know this always comes up, at least on my end too, the conversation between the admin and the auditor. There's kind of, as fund managers launch new funds, there's always that misconception that, admin does the audit sometimes, and that's not the case. Really, you're verifying the auditor, you guys are verifying what the auditor, or sorry, what the administrator does, the books and records, right? Can you maybe kind of explain how that division of labor, who does what?
Absolutely. No, that's a common misconception. It's something that needs to be clear. As auditors, it's very important that we keep our independence and that we don't create financial statements and then audit our own work. That's where the admin comes into play. So we will prepare draft template financial statements every year that'll give administrators, if they need it, all the appropriate disclosures, but they need to take that, tailor it, and put together draft financial statements. And then we get that. And then our job is to verify all those numbers. And that keeps our independence there. So the admin is a huge part of the role. I'd say 90% of our interactions and information requests, come from the administrator, and they're a huge help in the process.
That makes sense. Yeah. And then I guess from that point, the timing and frequency of an audit, is that done, annually? How often is it done?
Sure. Typically, it's done on an annual basis, so every 12 months, usually at December 31st. And that's pretty straightforward on that front. But a big part of that is that first year launch. It is industry standard when you can, from a regulatory standpoint, do an extended period audit. It makes a lot of sense if you're launching a fund July 1st or later to do an 18-month audit, 17-month audit instead of a stub period. So you just want to chat with legal counsel, make sure that it's allowed from a regulatory standpoint. In a lot of cases it is, and that'll help you save a lot of costs on that first year audit. And it keeps your investors happy from a due diligence. They still have an audit firm in queue, and we're listed in the doc. So that's definitely something to consider. If you launch before July 1st, I think there's a lot of benefit from a marketing standpoint and just, too long of a period. So I would probably do it July 1st or later.
How long and involved is an audit? Or is there a lot of back and forth? Are they typically, communicating with you starting January 1st, or kind of give us kind of a time frame, if you will?
Sure. So, I mean, we'll spend some time in the fall doing interim testing, getting comfortable with the books, and we'll connect with the administrator at that point of time and really talk about deliverables. So we'll want to know when can we expect that year-end package, and based on that deliverable date, we'll schedule the job. I would say from when we get that year-end package, it's usually a 4 to 6 week turnaround time. It can take longer. If it's a liquid type strategy and people are being responsive, you'll be in that 4 to 6 weeks, and obviously clean and accurate books. But if you have a venture capital type fund, a lot of private investments and confirmations are going out and you're waiting on it, that could delay it a little bit. So you just want to be part of that process. But I'd say a good estimate would be, 4 to 6 weeks for a smooth audit.
That makes sense. Yeah. I guess what can a fund or fund manager do to best prepare for an audit or to avoid delays and things like that? You talked about a few things, obviously having conversations early on with both you guys and the administrator, prepare, the fall for what's about to happen for the next year for the audit. Anything else that they can do to prepare for an audit?
Yeah, I mean, I think it's so important not to wait to the end of the year. We'll have people. I mean, I don't hate it as a business development person, but I have groups that need an auditor at the last week of December, and they had all year to get it done. It creates a fire drill element. Things aren't looked at, fund docs, things along those lines. So dealing with things during the year. A good audit firm will spend a lot of time before the end of the year preparing for the audit, doing that interim testing through the end of September. That means 9 months of activity has been tested, takes a lot of work out of busy season. More importantly, it avoids the fire drill element. If we see a deficiency, if we see a source document that we can't get a hold of or something not reconciling, you could fix it by year end. That way you hit deliverables. And also just coordinating with the administrator is so important. If you do that and spend that time up front, it'll make it for a smooth process. And evaluation, getting in front of that, not waiting to the end of the year to come up with your policies and procedures, talk with all the third parties involved, make sure everyone signs off, will really create very smooth process. And then lastly, just being responsive. Simple enough to do, but when you get requests, so on, don't sit on it for a couple weeks at a time, and that'll really help for a smooth process as well.
Yes. Steve, what complicates an audit, and is there any pitfalls you commonly see from emerging fund managers?
Yeah, I mean, I think the biggest thing we see is just inaccurate books, not having management review the books from the administrator before they come to us. Then we have to send them back. And before you know, you have 4 sets of revised financial statements. Really adds time to the engagement. It can add cost and delays where an audit might take 12 or 14 weeks to complete instead of that normal 4 to 6 weeks. Valuation, especially on groups that are investing in level 3, private type investments. Don't wait till December 31st to come up with your policies and procedures. If you're sending out investor letters and your valuation policies haven't been approved and you have to go back and amend that at the end of the year and it's not favorable to your investors, it could be a real headache. It does not look good. I've watched investors pull out of funds over that. And then as far as counterparties with the confirmations going out, just making sure you're part of that process. If we send out 30 confirmations for private investments, testing existence, making sure that they're coming back, following up, and so on, so that we're not extending the length of the audit on that front. And then the last thing, and it's so important with digital asset strategies, crypto, it's a unique strategy in space. So making sure you're working with experts across the board. On occasion, we'll see an administrator that just doesn't specialize in it. They might be good with traditional hedge. If they don't understand it, maybe they dabble in it, or same thing with a CPA firm. It'll create headaches. You'll be answering questions you shouldn't have to, and sometimes things are missed. So really just making sure each group you're working with is an expert in the space and really understands it.
Yeah, those are really important points. And I just putting my fund admin head on as well. A lot of emerging managers may, in certain cases, I'm sure you've run into this, where they're launching their fund and they may launch internally with capital and already start the strategy. And all of a sudden they're coming to the service providers, the fund admin, maybe 3-4 months later, and it's getting toward the year end, and then they're hiring you, the auditor, having that done early on versus later on, because now we have to back bill the portfolio and activity and all that. And then you have to come in with valuation policy that may be incorrect. So those things are important to be proactive, just as you mentioned. Those are great points.
Yeah, absolutely.
What is from the process of just the audit process, do you guys actually draft a valuation policy then as well?
So we have to be careful, from independent standpoint. We can't create the valuation policies and procedures, but we are going to be a big part of that process, and we will give feedback. So what we ask from our clients, and we have some templates and some 820 write-ups on fair value to give them a good starting point, but they'll have to take the first stab at it. Then we'll look at those policies and procedures, make sure it's compliant with GAAP, look at industry standards, give them that, and then sign off on it. And we encourage the admin to be a part of that. I mean, that's a big part of their role as well. When that happens, it's a very smooth process, but we do ask them to take the initial shot with some hand holding.
Yeah. So they would take a look at first stab at it, and you guys would come in and say, hey, we determine this is, best practice from a valuation methodology point of view, along with the admin.
Absolutely. Yep. That's the key. And one thing on that, so you might nail down your valuation policies and procedures, but it's also very important to apply them consistent. You can't have 10 investments all similar and handle 8 one way and then 2 another way where you deviate. It's more common than you think. So just keeping that in mind, because you can get it right, but then if you're not following it, it could be some real headaches at the end of the year.
Got it. And then to your point earlier, I guess, about, like, for example, level 3 assets, or, and maybe venture or some type of hybrid digital asset fund, working with a valuation agent that would actually determine the valuation policy. You guys would opine on that if that's correct, and the admin would look at that as well. Would that be another step to a maybe hard to value or level 3 asset in a portfolio?
Absolutely. I mean, we don't require it. In certain cases, it's needed, but when we see a third-party valuation group like a Houlihan or someone, it makes our life a lot easier as auditors and gives that extra layer of comfort.
Steve, I think this is the final question for you. What, in terms of costs, Obviously this is going to vary greatly if somebody has a crypto fund with 100,000 trades, million trades, whatever, versus a traditional fund that's just going through Charles Schwab, kind of, or maybe even a VC fund. Could you kind of give us an estimate of what somebody could expect to pay for an auditor?
And you hit it on the head. It's a very wide range. So what I could say is, on the low side, it could be 10,000. That would be, maybe trading on a Coinbase account or another centralized exchange, just some liquid activity, a handful of investors and so on. But it can get up from there, depending on the number of counterparties involved, the number of investments. I mean, if you're a VC fund with 50 private investments, it's going to be a lot of legwork there, looking at valuation, sending out confirmations and so on. So that's a huge driving factor. AUM comes into play a little bit just because there's more activity. Number of LPs can drive that. And then fund structure. I mean, if you're a standalone U.S. entity or, Cayman or BVI entity versus a complete master feeder with 3 entities, that's going to look a lot different. So, again, I'd say on the low side with the first description around that 10,000 mark, but it can go up from there pretty significantly depending on what type of activity.
Cool. Well,
Awesome.
Steve, we've covered a lot here. Appreciate you breaking down audit for us. Where could people go to connect with you and learn more about Richey May?
Absolutely. I mean, we have our website, which is richeymay.com. My bio's there, my email's there. I have a LinkedIn account. I keep my work email there. So feel free to send me a note. You can take my email, send me a message, and I know they can obviously reach out to either of you and connect the dots from there. But I welcome that. I love to help people that are starting funds out, be a trusted advisor, wherever I can add value, gladly do that. So please don't hesitate to reach out if you have any needs.
Awesome. Well, this has been great, Steve. We appreciate the education, and we'll make sure to include all your contact info in the show notes. And looking forward to a successful 2026.
Thank you once again to our friends at Richey May for sponsoring this episode. If you're starting a fund, you need an auditor. Make sure to give our friends at Richey May a call and tell them we sent you.